Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:11 a.m. Central Time, and I'm recording this in preparation for the market day of August the 10th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in to see what's been going on. Obviously, this is the first video I've done in a couple weeks, been off on vacation. And I guess I should say, I've been very much out of pocket. Even had no internet access for 5 days during that 2-week period, and very limited in the week prior to that. So kind of getting back in the saddle, as it were, getting a feel for what happened while I was gone. The first thing I did notice is that the difference between the close of 2 Fridays ago and the close of this Friday was a grand total of about 2 points difference. So not a lot net change, been pretty quiet it would seem, but obviously getting back in the saddle in terms of trying to get a feel for the ebb and flow and what's happening with the markets. So be a fairly straightforward report today, and we'll kind of get back up to speed with the nuances in the next couple days. In terms of the overnight, slightly positive, and all 4 broad market indices were up about 0.25% on all 4 of the U.S. broad market indices. Crude oil up fractionally, we could really call it scratch. Euro down about 1/3, bonds down about 1/3, gold scratch. So I had to double check the volume there, make sure that everything was hunky-dory. We do have plenty of volume. It just turned out to be scratch in terms of the net change as of the time of this cut. In terms of China, we had almost 5% up move, so big move there in China in the overnight. And Hong Kong just below scratch. Japan up about just under 0.5%. Germany up about 0.25%. United Kingdom down about 0.75%. In terms of macroeconomic reports for today, we have an FOMC member, Fisher and Lockhart, both individually speaking. We have, again, another presentation by Lockhart, so speaking twice for FOMC member Lockhart. That should take care of today. So pretty light day today. You could have a little bit of information coming out of these FOMC members, but usually that doesn't move the markets, but it has the potential to, so kind of be aware of that. In terms of tomorrow, you have non-farm productivity, labor costs. I don't see anything. Mortgage delinquencies. I don't see anything getting terribly exciting here for the first couple days of this week. In terms of our current volatility conditions, you see the short-term VIX is at a 13.04, nothing exciting there. Skews below 125, nothing exciting there. IV percentiles, 6 for the S&P, 33 for the Russell, 32, 39, all well below midpoints. Nothing particularly exciting there. In terms of standard deviation moves of late, we had a day last Thursday where we had all 4 broad market indices moving, but Friday less than 1 standard deviation moves. Also, if you look at the last 2 weeks, we're just below average in terms of the number of standard deviation moves, so nothing terribly exciting setting up there at this point. In terms of the daily report, and as I said, I'm kind of getting everything back to speed. But I believe everything has been properly updated in this report. We're still going to call this Phase 2 trend breaking at this point, but I'll have a better read on that the next day or two. what is accurate is IBD status is still uptrend under pressure. It was uptrend under pressure the entire 2 weeks I was gone. Accumulation distribution in the S&P is currently a D plus, NASDAQ a D, so that is not good. GMI index is only a 3 out of 6, but has had a buy signal since 7:30. Also note on the decision points from stock charts, a lot of red arrows here. So while the market is still in a trading range and nothing has changed about that since this last video, we're basically just below the midpoint of the trading range. Nothing particularly exciting about that placement. You do have potentially a higher low, but then a lower high. And we'll see where this goes. Do we get another lower low, or do we come back up? So we could be getting something of a triangle pattern forming here. But more important probably is that we're still within this primary range that goes all the way back into February. And until you really solidly break out of the range, you really have accomplished nothing. In terms of the Russell has been decidedly weaker, and while we had this very nice ascending channel, once that broke, it came back up, touched the backside both here, and then decidedly broke down, and now we've had a string of lower lows and lower highs, and really we could draw a channel going down at this point. Now, again, back to the primary, you could have a channel, a range channel, which would be encompassing this action all the way back into February, with a little bit of a peak out here, but more importantly, a bit of a peak out of the bottom of the range right now. So we'll very much be wanting to watch the Russell, which often is a tell for the broader market as to where we're going. Russell, of course, composed of many of our growth-oriented stocks, and when investment is slow with growth-oriented stocks, it often is a tell for the broader market. So we'll see where Russell follows through. If it's just a little head fake and whiplash back into the prior range, can it then set up a higher high, or is this really a intermediate trend and the most important dominant trend of the moment? So very interesting things been going on in the Russell. In terms of NASDAQ, obviously we had the big highs with the Google move and other recent activity, but pretty much right back into the range right now. Let's see here, and then the Dow, much like the Russell, has been forming the lower lows and lower highs, and pretty much has broken down below the prior range activity. So we've got 2 of the 4 broad market indices that are signaling a move lower, and if this gathers steam, could bring the S&P down out of its current action. The 2075 area seems to be pretty important in the 2070 in the SPX or the S&P 500, and if that continues to break down, we'll likely see action fall down into that 2050 to 2040 area, using SPX as our marker. So we're kind of at an important inflection point. Our buy-side long portfolio exposure position sizing opinions currently at 50%, given several of our metrics here, but based on the VIX is still at 100% for those active traders. So a couple variations on opinions there coming into position sizing right now. Market posture is decidedly bearish, and this is definitely broken down since the last report. S&P's at a 52.2 and in danger of falling below that 50 and going very bearish. Dow is already very bearish. NASDAQ's also, much like the S&P, in danger of falling into the very bearish territory. And then Russell is in danger of dropping into the severely bearish zone and dropping below the 20 level. So this is not pretty at all. So certainly this should be shaping your current desire to put on new positions. Should probably be looking to be very, very careful with the initiation of new positions with these current postures. Our hedge warning status at this point is level 1. If you look at the volatility-based metrics, most things were okay. We didn't have anything in particular flagging. VIX did move into a daily squeeze as of Friday's action, so that certainly portends an increase in volatility. Our distribution day count, which has in recent weeks been consistently high, is quite high now. At S&P with an 8, NASDAQ more friendly at only 3. We have also with Friday a over 300 reading on the New York Stock Exchange, new high, new low. So that is definitely of concern, and also of concern 4 of the 5 key intermarket risk aversion indicators are flagging currently as risk off. All that put together, you have option income strategies opinion. The VIX is inside the acceptable window. Conditions are acceptable for new positions. But consider that the market posture is decidedly bearish, very, very weak. You've had 2 of the 4 indices falling through their ranges, and you have the potential, the real potential for increased volatility. So all those things should kind of play into your position sizing opinions at the very least. Covered calls conditions, I would say, are not acceptable. I'll go ahead and override what it says right here. It's not acceptable to initiate new positions. Given our market postures, we probably would be better suited to wait for a new position. Put selling, they are acceptable for new core put positions if you are willing to position size down and kind of nibble and use your favorite positions in stocks that are in the size that you're willing to own. So this right now, we're still in the bigger picture in a range, though we're decidedly on the weak part of that activity. And if you wanted to nibble, that would probably be okay, but you should very much be position size in a setup that you are willing to own those shares should this market break down. Relative rotation graph, you see relatively better looking than the last time we looked at this. We've got several of these industry groups that are clearly doing better. The biotechs, banking, internet, home construction, all up here in the upper quadrant. Nice green patterns, though we had KRE kind of tailing off a little bit and XBI kind of doing a pullback, but still in the healthy areas. In terms of sector-specific market postures, only financials and utilities were looking good. I know I have a pairs trade on using utilities, and that trade is setting up quite nicely, and it's actually starting to come close to a target. So that certainly speaks to this recent activity by utilities. But notice that this is a risk-off kind of trade, and indeed most of the risk on here are decidedly down, and that should also influence your thinking. Sector-specific market postures by percent change. Again, utilities, financials, and information technology just barely up on the 1 day. If you're looking at the week time frame, only utilities up. 1 month utilities actually looks pretty good, up almost 5%, and certainly is the hero on that time frame. And that should take care of that for today. As always, if you find what you're getting here helpful, if you missed us the last 2 weeks and appreciate what we're doing here, certainly the encouragement is very much appreciated, as is that you share with your fellow traders. So retweeting us to your Twitter followers or StockTwit followers, obviously liking us on the YouTube channel, all those kinds of metrics are greatly appreciated. Direct feedback can be sent to support@falconglobaltraders.com. More information about what we do, more specifics, can be found at this website. And of course, the disclaimers, as always, hit the pause button if you need more time to review this. And we'll look forward to being back here tomorrow morning before the market opens with the market preview. Good trading.